This is James Hirechek with this week's Autochartist weekly Forex futures and indices market recap for the week ending August 10th, 2012. Since the massive intervention in early February helped the US dollar rally against the Japanese yen until it topped in March, this Forex pair has retraced over 70% of this big rally. At this time, the market could continue to plunge, erasing all of the gains, or it could turn around after forming this support base and break out to the upside. The two-sided trading opportunity in this Forex pair made the USDJPY the Forex Market to watch on August 7th. This move here was caused by an intervention by the Japanese central bank. Because the Japanese yen is so strong and it's hurting the economy, it is possible that the central bank will intervene again, and that will cause a breakout to the upside in the USDJPY. This triangle formation indicates impending volatility, and Autochartist is indicating that there is a bias to the upside. So we'll be watching this market again, just like we did last week. Last week we saw this as an emerging pattern, and it remains an emerging pattern until it breaks out either side. And again, there's a bias to the upside. We're looking for a possibility of an intervention, and that it should trigger a breakout to the upside in the USDJPY. Now, greater demand for higher risk assets drove up stocks and commodities last week, and that made the copper market one of the markets to watch, and this was on August 8th. We saw that I had a breakout to the upside over a resistance line of a falling wedge chart pattern. However, momentum dried up as the euro began to weaken and the dollar got stronger. Then late in the week, news came out that China's government reported a weaker economy, and that hurt demand for copper. So right now, momentum has been sucked out of this market, and it's unlikely to reach this 3.4759 Autochartist target zone. So again, it's a momentum trade. When you get a breakout, as soon as the momentum dies down, it usually goes sideways to lower like we're experiencing right now. And to end the week, following a prolonged move down in terms of price and time, you can see here we had this quick rally up from point B to point C, and this market stalled here. Now Autochartist has identified that we're looking at an ABCD Fibonacci chart pattern in the Euro US dollar. The downside target is 117.93. Now as long as point C holds as resistance, we could see this market break continuously over the next several weeks down to this 117.93 target zone. Okay, if it does reach this zone as expected, we could see a retracement into these Fibonacci levels, but let's see if this pattern pans out first of all. Again, the catalyst behind this move from B to C was talk that the ECB was ready to begin buying Spanish bonds. When that didn't materialize, traders gave up hope of a rally in the euro, and now we're looking at the possibility of no stimulus from the central bank. In addition, traders are waiting for stimulus from the U.S. Federal Reserve, and as long as they continue to stall, and they may do this until September or December, then the US dollar should strengthen, and that should put pressure on the euro. So again, this week we still have this pattern intact, this Fibonacci pattern. We're still looking at 117.93 as a potential downside target. This has been James Hirechek with this week's Autochartist weekly Forex futures and indices market recap for the week ending August 10th.